Hey everyone, with me today I have a very special guest, Sheryl Moore. Sheryl is the CEO of Wink and More Market Intelligence. She tracks sales of life insurance and annuities and provides competitive intelligence, product info, features, rates, sales, and marketing on products. Sheryl is the most connected person in life insurance and annuity space and an Intel rock star. Sheryl is a Forbes Finance Council member, a keynote speaker and author. And personally, Sheryl lives in Des Moines, Iowa with her husband and kids. And in her spare time, she manages a bed and breakfast, the Butler House on Grand, which is a 100-year-old English Tudor mansion. Sheryl, thanks so much for being here with me today. Welcome.
Thanks so much for having me, Kelly. I appreciate it.
Before we get into some work stuff, I'd love to ask you, with all of your professional and family responsibilities, how on earth do you have time to manage a bed and breakfast?
Well, my secret is twofold. I'm very, very organized. That helps with running all my businesses because I'm a serial entrepreneur. But the hottest man alive, whom I am married to, is my other secret weapon. He runs the bed and breakfast for me.
Super, super helpful. Yes, I've heard you talk about your husband many times before on LinkedIn and then even in personal conversations. And I think when you are an entrepreneur, you have to have spousal support, family support in some capacity, right? Friend support in order to, I think, really be successful. So I'm glad you've got a great support system at home with him and your kids. I would imagine they're with you in this journey and helping out however they can.
Yeah, it takes a village, that's for sure.
That it does. Well, thrilled to have you on with me today, Sheryl. We're going to dive into some questions. To start, we'd love to know about product trends. What are you seeing right now in the marketplace?
Well, really in general, I'm seeing a lot of development of annuities that are indexed and have benchmarks where you can earn interest based on the performance of the stock market indexes, but your interest is limited. We're seeing a lot of interest in the indexed annuities, and multi-year guarantees have become very, very important on annuities as well. So people can earn a credited rate of X% for 5 years or 3 years, or even we have some that guarantee it for 2 years. So on the annuity side, things have been really hot on those types of products. On the life insurance side, we're seeing a lot of focus on living benefits on life insurance products, which I think you and I are going to talk about.
That we are, yeah. So what exactly are these living benefits? What are carriers providing?
Well, living benefits provide a acceleration of the death benefit in the event that the insured person becomes disabled, critically ill, chronically ill, in a situation where they need money to help pay for medical expenses or other fees and things that have accumulated because of this illness or this disability. And so what it does is take your life insurance policy and it pays out before you die so that you can have some of the money that's needed to meet those needs.
Right. And I would imagine a lot of this has been driven by consumer demand. People have probably been wanting this type of protection, right? And been wanting these benefits even before they die. Have you seen that? Have you heard any feedback from carriers on that?
Well, it's actually what's driving sales of life insurance right now. So I would say that consumer demand is speaking loudly in the development of these products, and we're constantly seeing new innovation when it comes to these living benefits. So absolutely, I think it has everything to do with consumer demand. In fact, I was just reading that we had record sales of living benefit or linked benefit life insurance products. So the long-term care type components or the disability or the critic and chronic illness features are really more popular than they ever have been today.
So we don't want them to have to go on claim, but if they do, having that access to that death benefit can save a family in a huge way, financially and just practically in their family, right?
Well, I can speak to that personally, Kelly. I've helped my grandparents go through the long-term care process, and they didn't have any LTC insurance. And it was just very burdensome financially and stressful from a mental health standpoint because we didn't have that benefit to rely on. And we were constantly concerned about, are we going to be able to afford care this month or not? Are we going to have to switch to a different facility? You know, what's grandpa going to be getting? And I think that that is one of the biggest reasons why it really makes sense to have these products, because it's so easy to put it off and think, oh, tomorrow's another day, tomorrow's another day. But once you're in that situation, you'd give anything not to be in this situation. And the least thing you can hope for is some sort of financial benefit that can help you to not have to worry about the finances and where you're getting care.
Absolutely. It's already a really stressful situation. And so any type of ease from those consequences and that burden is an enormous benefit for the family, financially and then even physically. You know, if you can hire help to come in to help your loved one and not have to physically provide it or have your family provide it, is just an enormous benefit. So I'm so grateful for carriers that they continue to improve and listen to what consumers want, because at the end of the day, you know, it's for us, the consumers. The benefit is for us, and it's the protection that we really need and want, and they're listening to us. So kudos to the carriers for taking action and continuing to evolve and improve the product.
Well, and I think that as we have medical advancements and all sorts of new experiences, that drives the innovation and the product development that we have in this space. You know, originally it was you get a benefit or an advancement of your life insurance proceeds while you're still living if you're confined to a long-term care facility. And that was it. But now you can get a lot of different features where it is covering critical illness, chronic illness, disability. You can have somebody come into your home and even a family member help take care of you if any of those situations arise. And those weren't features that we originally had when somebody thought, let's go ahead and provide a living benefit inside of a life insurance contract.
Right. And in that contract, that policy language is so important. So I think when consumers are investigating this and they're trying to figure out what product they want and what's going to work best for them, they need to work with an advisor, an agent who is competent and well educated and experienced to know the differences between chronic illness and critical illness and long-term care, and how that policy language is structured so that they can properly educate the consumer on, this is what you can expect. Because we want to set the right expectations for our clients so they know, okay, if XYZ happens, this is how I can use my policy. These are the triggers. You know, this is the timeline on what to expect. So we want consumers to be well educated, which means advisors and agents need to be well informed.
I'm a big advocate of agents being product nerds when it comes to these products, Kelly, just because you really do have to dig in and read the contract and that policy language. It's so important when you're dealing with these issues. And it's not a situation where every product is pretty similar to the next product. There's a lot of differences in between one company's product and another. So you're right. You need to be in there and digging around in that language and understand properly as an agent, how does it work, so that you're able to convey that to your clients.
Spot on. Traditional long-term care insurance, how it's structured, it's specifically paying for extended care needs, right? It's a designated bucket specifically for long-term care. There's no added benefit, no death benefit, or anything like that if you don't need the care. But carriers have come up with these new solutions, hybrid, linked benefit, asset-based, really all very, very similar, but many different names, so that we have more flexibility and so that there's something there if you don't need the care. So Sheryl, can you talk to us about how these hybrid linked benefit policies are structured?
Yeah, you know, Kelly, this is the part about these products that I really, really love, because for the people who are really concerned about if I don't use it, the long-term care insurance, I lose it. And so that can be a real objection for some people. What these linked benefit products do is combine long-term care insurance into an annuity or a life insurance policy, so that if you don't use it, you still have the benefit of your annuity, or if you don't use it, you still have the benefit of the life insurance policy. And so I think that's really, really innovative, and it's nice to see the carriers coming up with some solutions so that you can overcome that big objection for well, I don't want long-term care insurance because I don't want to pay into it and not have a benefit if I never have to use it. So I'm really pleased that we have these products. On the annuity side, the linked benefit products really are providing some really robust features within an actual annuity contract, which an annuity is just a instrument that guarantees you payments for the rest of your life. No matter if you live to be 150 years old, it will send you a paycheck for the rest of your life. These benefits with long-term care features actually can use the values of the annuity to help provide that long-term care insurance should you qualify and meet 2 out of 6 activities of daily living. The life insurance side is very similar, where you're just providing those long-term care benefits within the life insurance policy. And then if you don't need the long-term care insurance, you still have the benefit of using the life insurance policy in the event of your untimely death. So it's really exciting to have these products just because it's almost like a whole new segment is being addressed. It's not just we have long-term care, we have annuities, we have life insurance. Now we're meeting the best of both worlds with a couple different products and combining long-term care insurance with life insurance or annuities so you can overcome that objection.
Right. And for some, that can be difficult for some clients to get over that. And so having this option is really nice. And there are many factors that really go into, is it the right fit anyway? A traditional policy might be a better fit for one couple or one individual, and then a linked benefit policy might be better for another couple or individual, depending on many things: their family, their finances, their health, their situation, their goals. But we have so many options in the marketplace today that really this is the best time to plan for long-term care when we're talking about insurance products, because we do have so many that are available to us. And so, working with someone that is competent and educated in many different solutions, not one, and one is not better than the other either, right? Traditional, linked benefit, short-term care, annuities with long-term care benefits, they're all so valuable. One is not better than the other. They just have different fits. And I hope people take that away from today, is that, carriers have come out with some really great solutions. One's not better than the other, but we really just want to find the right fit for each specific client. And providing that leverage is huge, right? That designated bucket of money, that protection for your finances and your family, that's the goal.
Yeah, and I think that that's important, to be providing some sort of coverage for long-term care needs, whether it is through a linked benefit product or standalone long-term care. In fact, I'm hearing about people being sued because they never discuss long-term care insurance needs with their clients or prospects. So it's really, really important that people are talking about this and making sure that their clients are aware of the products and able to make the best decision that's right for them.
That is right. And it's not a one and done conversation. This is something that needs to be addressed over time, when they maybe first take them on as clients, and then, they keep kind of planting seeds. And over time, maybe they will be ready to actually pull the trigger. Maybe it is an insurance policy, but having a plan specifically for long-term care, which may or may not include insurance. Of course, the insurance, there's so many benefits there, but people need to have a plan: the who, the what, the how, the where. Those are all a lot of things that need to be considered when coming up with a plan. And an insurance policy helps fund the plan. And so I hope advisors and agents take this to heart and saying, okay, I talked to them when they were 45 about long-term care and they don't want to do anything about it. I'm done. No. You need to keep talking about this and bringing this up, because it needs to be a part of their whole comprehensive financial plan. And that's maybe every couple of years or every year. But over time, the goal is to have a comprehensive plan.
I couldn't agree with you more, Kelly. It's very important.
There are so many tax advantages, specifically with pension protection annuities that provide protection for long-term care. Can we talk about that? What a valuable thing that was passed in 2006 that became effective in January of 2010. What do people need to know about this?
The great thing about the Pension Protection Act, it provides tax advantages to help incentivize people to use these linked benefit products where you have an annuity with a long-term care feature. I think it's wonderful that our government is providing this incentive to help people to make that decision and overcome this objection to, I don't need long-term care insurance. Here you have a tax benefit that's incentivizing people to do it. I think it's just wonderful that we have the Pension Protection Act to provide those benefits.
I have an example for people. Let's say you have a $100,000 non-qualified annuity and that the cost basis is $60,000. So you've got a $40,000 gain in the policy. You can complete a 1035 exchange, so where you're just transferring that money, and you are able to not only transfer those gains tax-free, but then those gains come out tax-free later for long-term care expenses, whether you're receiving care in your home or in a facility. Making sure that they're non-qualified annuities that meet the PPA provisions is important so that you can then withdraw that money for long-term care coverage later, income tax-free, but such a valuable benefit.
And I think it's important, like going back to when you said you need to be working with an advisor who understands the language and the nuances between these plans. That's important too, because there are a lot of annuities that have what I call a long-term care kicker in them, where it may be providing a more enhanced benefit of the annuity if you're meeting 2 out of 6 activities of daily living, but these are not actual long-term care insurance and they do not qualify for Pension Protection Act treatment. So it's really, really important that you're working with an advisor who understands the differences between all of these annuities and the features so that you are able to take advantage of that PPA benefit.
Yeah, yes, valid point. Again, agent advisor needs to be well informed. They need to know all the solutions, and the consumer needs to ask questions. Don't be afraid to ask questions as a client, as a consumer, is this a PPA non-qualified annuity? Does it qualify? Will I get benefits tax-free? What are the tax consequences? These are all really good questions to ask. And even asking the advisor agent, what kinds of solutions do you have available to you? What do you offer? And if they only say, oh, well, I work with XYZ company and we provide this solution, if it's like a one solution, you need to look elsewhere. You need to work with someone that is independent and has lots of different companies and different solutions to be able to find the right fit for you.
Yeah, and there really aren't a ton of companies that offer these linked benefit annuities that have long-term care within them. That's something that I really wish were different.
And what do you think is holding companies back, Sheryl?
There's 2 main things that are preventing companies from entering this market of linked benefit annuities. Number 1 is underwriting. And that's basically where you have a professional within the insurance company's office who's trying to assess the risk of insuring a person. Underwriting is something that's normally gone through on life insurance and long-term care insurance, but it's not something that people go through for annuities, because the insurance company's position is, we're just going to assume that insuring you for an annuity from a risk standpoint is like anybody else. So you don't get rated, and they don't look at if you're a smoker or not. And they don't look at your age really, even unless you're taking out a income annuity. So underwriting is very, very new concept on the annuity side. And a lot of advisors object to it because they don't have experience doing it. The underwriting is the one piece, but the other piece is really the administration of the policy. So having a computer system that is really set up for the linked benefit product and being able to send out the proper notifications and report taxes to the IRS and answer phone calls with qualified customer service reps. Those are all things that go into the administration of these policies, and it's very foreign to a lot of the insurance companies who are just dealing with annuities. So those are 2 of the biggest roadblocks that I see to people offering more linked benefit annuities. And I really wish that we were in a situation where we could overcome that, but we really just have a few insurance companies that offer those products. You can count them on one hand today.
Mm-hmm. Do you foresee that will change in even the next 5-10 years? Do you think more carriers, maybe it's technology or just advancements that they're able to overcome these obstacles and enter the marketplace?
Great question, Kelly. Yes, I absolutely feel like we are going to be able to overcome those objections. There has been so much technology and very rapid change in the underwriting space that I think that really has the power to overcome that objection about not having underwriting talent to help with the long-term care portion of the annuity. But then technology has been a major focus in the life insurance and annuity industry for a good 10 years. And I think that that can really help with the administrative platform as well. So I look to see more and more carriers entering this space over the next 5 years to decade from now because of those advancements and the focus on fintech and underwriting. And those are really advancements that we're seeing in other lines of business too. Life insurance in particular has been advancing and becoming much more sophisticated because of underwriting and technology advancements. For that reason, there's no reason why it shouldn't help us in the linked benefit annuity space in order to get more companies to enter this market.
And I'm so excited. As an agent, I'm sure other agents and advisors are with me in this arena, having more carriers, solid solutions for our clients. Can't wait. 5-10 years can't come soon enough to see these new advancements.
Well, I'm a huge fan of competitiveness in the market and having lots of choices. So I'm really excited about it too, Kelly.
That's right. It's like going through the grocery store, right? Produce section. What color do you want? What flavor? What's your preference? Being able to really pick and choose and what is going to fit you best. That's the key. So, and I know in these next 5-10 years, Sheryl, you're going to continue to blow us out of the water with all kinds of phenomenal data and provide just great feedback and competitive intelligence for our industry. So thank you for that in advance and for everything that you're already doing for the insurance industry. Just you provide so much value day in, day out, not only in your business, but even on LinkedIn to all of the others, advisors, agents, and people in the industry. So thank